Should we just start by quick introductions from the panel? So start with Ugne.
Hello, everybody. Even though there seems to be not a lot of people today that care about payments, but hopefully we'll attract more by the time we start talking. So my name is Ugne Buraciene. I'm the group CEO of payabl. We're a financial hub for clients and merchants, and we process payments in all over the world. And we provide a full suite of services from acquiring payment services, payouts, card issuing, and anything that you can imagine in the financial space.
Hello, everybody. I'm José Marti, CEO of PayPaga. We are a PSP, payment service provider for emerging markets. We started our focus in Latin America and having local rails in that part of the world, and now we're shifting into the north of Africa with Egypt and Morocco. So specialized in local payment options such as bank transfers, wallets, and cash solutions in these markets.
Hey everyone, my name is Alex Behar. I'm the Chief Information Officer for ZOTA. We are a marketplace for payments. We're operating nearly 60 markets, providing bidirectional payment rails, predominantly focused on emerging markets and where the young people in the world live.
This is Baskar. I'm the co-founder and CEO of Mobi and Canis, another company. We process local payment methods for forex brokerage, crypto services, and the likes, all from Southeast Asia, with every local payment that you can think of, right? And with that, and the stablecoin settlement and non-ramp service, we cover most of Southeast Asian rails at this point of time. Thank you.
And I'm Richard Usher from OpenPayd. I'm the Director of Trading. We're a banking-as-a-service provider, providing accounts, FX, virtual IBANs, all through a single API. And we're also truly rail agnostic with our VASP and crypto offering to try and bring that to clients. So let's get into the payment shake-up. Cross-border chaos meets the wallet wars. Let's start with the Rails reality check, stablecoins versus SWIFT. Blockchain and stablecoins are being positioned as the answer to cross-border settlement. But which use cases are moving away from traditional rails, and where does SWIFT continue to dominate?
I can, yeah.
Let's go with you, Baskar.
You know, it's interesting, right? You know, traditionally, money movement has always gone through banks, and SWIFT has been the backbone for all that. And it has become so formulated that money really doesn't move in these cases. And that is the advantage the current business has. What stablecoins is up against is that part of the equation. As long when money doesn't have to move, we win the race. Right? So SWIFT has that advantage, and everybody is fighting to get to that advantage of having the stability, the equilibrium of not moving it, but still make the money available on both sides. Like all large banks, they literally don't move money from one corridor to the other. It is just making the balances change on both sides of the accounts. And that is where we are fighting to get to a stablecoin rails to get to that status where you don't have to send the money over, but you just balance it out. And that's the number one problem. The other problem that we all are up against is with SWIFT, the advantage that we have with stablecoins is SWIFT has the uncertainty, which stablecoins is able to fill in. And how many times do we have to wonder when will the money go? When can we send the money, right? So it's like ordering an Uber. When you order an Uber, you know exactly where it is, and your anxiety is not there on when you're getting your car. Same way, I think that problem exists with SWIFT, and that's why stablecoin still has some market, and the equilibrium will get to the benefit, will make it better than SWIFT and altogether. Yeah.
I think it's ultimately, I'll play the devil's advocate here, maybe a little bit, right? I think it's ultimately not about Swift against stablecoins, right? We're talking about a choice, right? And the rails that fits the needs of a particular use case the best, right? So in some cases, it might be stablecoins. In some cases, it might be Swift. And as the colleague already mentioned here clearly, I mean, Swift has the upper advantage because it's been there for a very long time. It is stable. It does work, and there's a trust factor, let's say, to this as well, right? But ultimately, when you look at payment options in general, you look at who's going to be the user, who's going to be the recipient, and what are also industry restrictions, right? Are we talking any particular compliance or regulatory, framework surrounding, that particular industry? And that's how you choose the right option, and whether it is Swift or whether it is stablecoins, right? But having said that, stablecoins is gaining a lot of traction, and there's many use cases now which are, I think it's really cool, and some of them that were announced now, for example, it was deal.com. We just announced a couple of days ago that they are allowing employers and employees to be paid in between, for example, for stablecoins, right? So connecting, the global community with easy, quick, payments. But also stablecoins has this kind of, sort of trigger point at some point, right? Because if you have to off-ramp it, the speed and the cost and all of it sort of goes down, right? So there's still a very fine line and of the benefits, that it brings. But definitely, there's definitely really good use cases. But I think it's use cases for all of them, and it will continue to be just a great additional option.
Yeah, no, I'm a little biased here because I'm a huge fan of stablecoins. I think they're extremely important. I think there's much more advantages than disadvantages when it comes to stablecoins. And I just want to say a funny story, right? When we were paying the booth that we have here at the event, it was through a Spanish bank account, through the banking system. We had to transfer over to a Cypriot bank account, and it took a lot of time, lots of days, lots of fees, right? In fact, we even had to go to the bank in person in Spain to conduct that transfer. So while the points of Swift has been there for a very long time and there's a lot more trust to it, I think little and little we're going to start seeing a stable coin option in many of the things that we're paying today, right? So you can go through and it doesn't have to be one or the other, right? You can give the end user the ability to choose whether, hey, you want to send it via Swift, via SEPA, or via USDT, USDC, right? So I'm a huge fan of stablecoins, and I think it's a lot more beneficial because of the speed.
By the way, I didn't say that I'm not a fan. I'm just saying it's about a choice.
No, we've got you on record now. But I mean, there's been a lot of talk there about trust and reliability, but I think it's fair to say that Swift is trustworthy and reliable for euros, sterling, dollars. But when we start talking about markets in the Middle East or South America or Asia, that certainty doesn't exist. You send a Swift payment, it could take 5 days, it could take 7 days, and it is still expensive. So there's definitely room, in my opinion, for this for stablecoins to step into that space. But I think you also mentioned the lack of regulation, adoption. How do we bridge that for stablecoins? How do we get people more confident using them?
So I would like, with your permission, Richard, to actually sort of weave from where Ugne and José left off. I'd like to say the following: technology adoption is very fast whenever technology collapses complexity. And I think we're starting to quickly realize, from José's story especially, that there's still inherent complexity. And whenever friction changes, or we find a technology solution that reduces friction, for example, cross-border internet calls via WhatsApp and other calling solutions. If you guys remember, just 15 to 20 years ago, the predominant way to call internationally was via copper wires and pay international rates, whereas today that changed. And what stablecoins specifically provide, and I would like to separate this discussion into two pieces. The first one is the institutional side and using it as a settlement mechanism. And I think us folks who represent institutions, we're a lot more ready to deal with the complexities of this new technology and adapting it quickly. But I also want to touch on the side of retail users and how fungible stablecoins are today for them. I think that in certain markets, adoption happens much quicker than others because of demographics. So in certain regions of the world with younger populations, their first internet-connected device is a mobile phone. So to them, these stablecoin payment infrastructure feels a lot more native than it does to other markets, more advanced and developed markets. So I believe that in the last 5 years, stablecoin adoption has been skyrocketing. There's about, I want to say, around $400 billion worth of stables issued, and the velocity of those $400 billion worth of stables is higher than, for example, Visa in terms of daily and weekly volumes. So the only way forward is up. The more people understand how to use these mechanisms better and the more native it feels to them, the faster adoption will come. And it will not be long before you're able to use stablecoins to pay for this expo, for example, which will entirely compete. And I do think that at the end, these rails compete with SWIFT directly because of this inherent complexity of the legacy networks and the cost of it.
Yeah, I completely agree. And that kind of leads me on to our next issue or subject, so the fragmentation headache, winning the wallet wars. We're seeing rapid growth in local wallets, super apps, and alternative payment methods. For PSPs and platforms, does this represent opportunity, or is it the structural fragmentation? Do we need mass consolidation in the near future for this to really expand, or are we okay with the headache of all this fragmentation at the moment?
I can take that. My opinion is that this is exactly what sets good payment service providers from not so good ones, right?
Thank you.
Which we're all great here that we are on stage anyway. I think the point and the job that we carry is to reduce this complexity for the services that we offer, right? So for us as payment service providers, I see that as an opportunity, right? So the more complex the environments and the more complex, the payment options are, the better we are positioned to help our clients to cater for those needs, right? And we're not only talking about, giving rails, for inbound or outbound payments, right? You need to manage those. You need to manage the risk, right? So we're talking about quite real high velocity complexity in these cases, right? So for us, I see it really as something that, to focus on and to work on very hard. And ultimately, that's the name of the game, right? You combine and you offer the best solutions and also best products in general, which cater for your clients, right? So you make them or help them navigate through this complexity.
Actually, the wallets has been, of late, has become an integral part of everyday's activities in most countries, because a wallet exists because there is an ecosystem around it. And you cannot break that ecosystem and create a bigger ecosystem. So our job is, as PSPs or payment service providers, is to make sure we keep the end customer in mind and provide a service that they need, a wallet top-up process facility that they can use. And that's what we are supposed to be good at. And we look at every time when we do something, we look at what the customer needs, what the end customer needs, and then backfill what our immediate customer wants, right? So in that sense, I don't think the wallets are going to consolidate. We have to just be able to provide a service that delivers a service what the end client needs.
I couldn't agree with Baskar more, right? I think our goal and our mission as PSPs is to make sure that local consumer in whatever country we're processing in has an option to complete that payment, right? Because while our merchants are companies, at the end of the day, we're facilitating the deposits and the payouts for their users, right? So we always need to think not only on the merchant, but on our merchants' clients, right? That they have that option. So whether it's a local wallet that's extremely popular in the country, we need to make sure we cover all all the different options that are popular to make sure that no deposit goes missing. Let's put it that way.
So I would like, with your permission, to draw a little bit of a historical parallel. Today, the mobile phone market is effectively a duopoly, one led by Google's Android and to a smaller degree, Apple's iPhone. But a number of years ago, that wasn't the case. Those of you remember Nokia phones and Symbian and an entire ecosystem of players, the Ericssons of the world, that are no longer with us. And I think what will happen in stablecoins generally is, as the industry reaches maturity, we will end up working together as players in this ecosystem, building this new financial system together. We will end up standardizing. And at the end, the wallet will become a commodity in a way just like many Android phones are a commodity. So what awaits forward is effectively we follow wherever the retail users are, wherever their liquidity is, whatever their stable coins are. And our mission is to provide a seamless way that crosses cultures, crosses different adoption patterns, for us to provide a native experience, wherever it might be, whatever chain it might be, whether it exists today or it doesn't exist today. I think this is our goal and mission, and it should be to work together towards a level of standardization.
And I think going back to the stablecoin topic, right? We're seeing, at least in lots of countries in Latin America, that mix between the best of both worlds, right? So the speed, the high limits, the quickness inside the banking system. Clear example is Pix in Brazil. Colombia, its neighbor, copying it now with Breve. They put small limits on Breve, so I think they're going to start hiring them, right? But we're seeing that the end user and the consumer is looking for the good features of Swift and the good features of stablecoins and mixing it together.
I think I want to add something. In my view, I don't believe in standardization, right? I do believe in orchestration, though. So orchestrating those parts and making them work, yes. But I mean, to have an illusion that you can standardize all of the payment options, that's pretty wild in general, right? Because if we take all of the rails, if we take all of the complexities, if you take, the country restrictions, if you take industry even restrictions, right? Standardization, as I see it, is not possible. But however, a good orchestration as a payment service provider for those companies to be able to seamlessly accept those payments without any hiccups, with clear settlement timelines, no money losses, and still giving options for the end user to whatever it caters for their needs, I think that's the true ultimate goal, at least in my humble opinion. But maybe I didn't understand what you meant about standardization.
So I would say the following. In a way, the card schemes, the way they standardized both on the issuer and merchant acquirer parts of the stack, is through requiring some sort of non-regulatory and yet sort of participation standardization in the form of PCI,
of
for example.
Yes,
processes, security, the ability to deal with frauds. So that's more what I meant. I am absolutely certain that various providers, like what Coinbase is doing with Base in the US and others, at the end, on that tier of issuance and immediate fungibility, there's a lot of competition. And at some point, this competition will turn into co-opetition, where we have to cooperate to provide value as an ecosystem.
One thing also to note is that, while we look at cards and we look at all of the standardized processes, right, we need to remember how long the cards are here for, okay? So if you have an expectation that suddenly, all other payment options will be the same, and we have clear examples, account-to-account payments, heaps of issues which, are still being, to resolve, right? So card is just a very mature rail based on multiple reiterations, multiple process adjustments, and a very safe environment for all of the participants, right? But that doesn't come overnight. So I think the expectation should not be that suddenly all of the payment options can be equal or as good as, let's say, as those that already exist. So it will take time to reach that standardization process.
So I wanted to add one last point to what you're saying, and that is that this year in October, the first credit card called Charge Card will turn 70. The first charge card was issued in 1956 as charge card. So if it took them 70 years, today's technology S-curves are much, much shorter.
True, absolutely.
I still have that credit card. I guess it's interesting to hear both views there because the utopia of one smaller, unified infrastructure sounds great, but then we kind of lose the point of stablecoins and their alternative routes that we're trying to seek. So if it standardizes too much, something else will come along and we're back to that same problem. So I guess from a PSP's point of view, we're stuck with all these different wallet fragmentations and trying to put together because that's what we're here for. And our clients need us still. Do we think the regulation issue with bridging all these different chains together and different countries, is that going to be a problem for blockchain moving forwards as different countries bring in different types of regulation? We're starting to see it come in now, but the Genius Act is almost through, but that lack of incentive and rewards being paid on stablecoins is hurting that part of the market. The EU is obviously slightly behind, as it always is, but as that starts coming through, do you think that's going to hamper things going forwards?
My humble opinion that regulation is something that you have to live by, and it makes the whole ecosystem safer and more secure for all participants. It needs to be, of course, done right, and there's many examples where it's not done right, and maybe not, too over-regulated in some instances. But I think the right balance of it is required, not to stifle the growth and the adoption of the set payment option.
Yeah, regulation is always a double-edged sword, isn't it? It is needed for adoption, but it's a pain to live with, right? So we have today a lot of these stablecoin transactions are happening for large volume, big ticket settlements and treasury flows. It is not happening at the smaller tickets, at the consumer payments. It will only happen, I believe, when regulation steps in and puts a proper framework in place for everybody to trust and make it a day-to-day activity for themselves. So regulation is, I agree 100%. It is definitely a double-edged sword.
The trust will definitely help with the adoption, I think. So,
Yeah.
I couldn't agree more. It's definitely a double-edged sword, but I think one doesn't come without the other. And I think all of the participants in it have to be sort of open about that. And then once everyone understands that, I think the only way is up, in my view.
Yeah, no, and I think regulation is extremely important. I think in places like the EU, right, where a lot of the times it covers the whole continent, right? It makes things a little bit easier in a way. For Latin America, at least, right? It's complicated in the sense that, for example, you have Brazil and Argentina next to each other, but the regulation can be completely different. Some can be more friendly, others can be less friendly, and a lot of the times what happens is that the regulation isn't as clear as we would like it to be, right? And I think from a PSP standpoint, you always need to have regulation in mind, and you have to have the ability. I think the PSPs that are going to survive through any type of regulations are the ones that know it exists, acknowledges it, and knows how to adapt to it as quickly as possible. Because while I've heard people complain about, in the EU or in the United States or this, welcome to Latin America, where one day it's A and the next day is Z, and as a PSP, we need to be ready to always adapt and apply, right? So I think that's what's going to differentiate.
But I think here is also sort of a theme that also came around, is that we, as a layer of the payment service provider, that's also we add that level of trust, right? So we are ultimately safeguarding our clients' funds and also making sure that that whatever changes we are facing, that we always guarantee that those payments reach, right? So this is also a very important point when merchants and clients, choose their payment service provider. They choose a reliable partner, and that they don't have to worry about whether there's a difference in Argentina or not overnight, because someone, as a mid-layer, will take care of it and will make sure that nothing happens.
So my point of view is that the regulators are tasked generally with protecting the end users. And so this is where regulation kind of starts from. And as you correctly pointed out, over-regulation is the nature of the beast. Regulators overreact at first, and to some it takes more time than others to deregulate in a way. We've seen this across many other industries, airlines, or anything you can think of. But I think that one of the more interesting aspects of that is that us as payment providers, we serve merchants, and the merchants we serve are fairly global, all of us. That's why we're here on this panel. And those merchants get to choose where they start their business, where they operate out of. And this, I believe, also creates a regulatory tier that also competes against each other. The UAE regulatory regime has been outstanding in their ability to quickly learn about these technologies and quickly understand where regulation should have a say and put their finger on, and where they should allow competition to exist.
I completely agree, and I think a good regulator ultimately looks at protection of the end consumer, as you mentioned, right? And then everything else comes, from there. So if you really understand what the actual risks are, and you know how to protect, the bottom layer in this case, or the most important layer, because that's where the funds are coming from, right? Then I think it's a good job, right? And then if it's too much, then it creates sort of inconsistency and also instability, in my view, in the market.
Right, you talk about firms setting up wherever they want. Let's quickly talk about payouts versus collection. I think from our point of view, collecting's the easy part of dealing with stablecoins and blockchain. Payouts, most people talk about taking payments in, but sending out is just as important. What matters more for payouts? Is it speed, is it certainty, or is it cost?
I 100% agree with you. A lot of times, payment companies think you're supposed to collect payments, right? But the most important part of it is how to distribute the money back to the end consumer when they need it. Recently, I had an experience. One of my flights, British Airways, was delayed by 4 hours. I got an email from the service provider saying that I can get you compensated, but we'll take 35% of that money. I just had to fill in the bank account details and send back. Within a couple of hours, I got the money in my bank account in Singapore. Whereas British Airways, I was flying from Cyprus to London, and all is connected. How fast they can do it? It is because of people like us in between servicing them, doing payouts at a fast and precise manner into somewhere in the world. Which actually shows how important payout is. All our clients, our merchants need it, but the end consumer is who needs it more, actually. And if they're convinced, I think the businesses are going to flourish better than what it is.
I think you really nailed it here with one key word, okay? Distribution. So basically, and disbursement of funds, right? Pay-ins is not hard at all, right? And if you look in general at the e-commerce as it stands now, okay, almost 70% is based one way or another on a marketplace model. What does that mean? That means that almost 70% of all e-commerce globally requires a certain distribution of money back, right? So we're not living in the, and also, and if you look at the changes for this happened, throughout the years, in preparation for this. If you look at Visa, if you look at MasterCard, Visa and MasterCard, for example, are no longer card schemes. If you look at the companies that, they've invested, the companies that they bought, they were preparing for this, for years in advance, because the anticipation was there that this is where we're going to end up. And the numbers are absolutely insane. You're talking about that from 2014, the jump from marketplace need of payments was from like 40 to 70%, right? So we're talking about a decade, and we're almost getting closer to a number that is almost obsolete. And making payouts is very tricky. especially if you have, global operators who need this disbursement of funds, in different countries. Acceptance is easy. The name of the game is whether you can really pay out globally, efficiently, fast, in an instant, wherever the client basically needs it. This is the real obstacle and the real advantage of using all of the payment rails that we've discussed, right? If you combine all of that, and if you combine best of the payments, you can cover all of the world at the moment pretty well, right? And all of those options are complementing each other and allowing, these funds, to reach, where they have to. But I think the future, the way that I see it, is going to become even more complex in terms of, payout disbursement, and the need for it will just increase. And I think people don't actually realize that when we talk about it, almost everything that you touch day to day, from your Uber ride to your Fiverr, creation of a logo or anything that you can think of, it's all based on marketplace model. So the meaning that there's always someone paying and that someone needs to be paid back, right?
So I actually, it's a very interesting thing you raised, Ugne, and I want to take that narrative and sort of continue with a bit of a pencil and say the following. I think that there is a whole generation of entrepreneurs today that are growing up in all around the world in different markets, and they are growing into a world where payments are bidirectional by definition. That was not the case. SWIFT, for example, addresses, there's about 6 billion people without a SWIFT account, right? And so I think that the future holds a very challenging environment for these legacy schemes because of how creative this new generation of entrepreneurs are.
I agree, but from if you look at far, future, maybe SWIFT will be dead, maybe. There is an option for that. Sorry if someone is around from SWIFT here. But until that happens, there's still a lot of things that that need to take place. But I do agree that that other options just play much better role in making those payments, and in some cases just way more efficiently than SWIFT ever could. But a very interesting number also. Sorry, I'm going back to the card schemes because that's what I love. And if you look again at Visa and MasterCard and the rails, that they build in the years, right? So we're talking about account-to-account payments. We're talking about wallet accessibility, because you can have money sent and Visa Direct, and you can reach 11 billion endpoints, right? With those combined. But again, it's not a one single option or not one single option for disbursement of the payments. It's all of those combined in a network that you could reach out, which I think this is really the end game.
Yeah, absolutely. The key point there is we can't just shift the problem with these solutions. They actually have to improve the situation, and I think we are seeing that. As always, the clock is getting against us, so you're going to get 45 seconds each. Fees compressed, competition rife. How does a PSP differentiate itself going forward? How do we win this game as a PSP?
I think I already said everything. You just have to be better than everyone else, and make sure that complexity that that is out there does not translate to your clients. So choose your payment provider wise. Do your research. Don't leave payment as a last option. It's the most important thing for any business worldwide. And the more complex you are and the more widely you operate, the bigger issue for you it will be.
Agreed.
I think going back to stablecoins, so I think reliability, right, transparency, speed are all really important when choosing a PSP. Other than obviously having a wider range of payment options so that your consumers, depending on the country, have each and every way to pay. But I think it's very important to have transparency, for them to be transparent in where they're charging you, where they're getting their FX from, how they're converting from local currency to whether you want a SWIFT or a USDT settlement. I think that's extremely important. And how adapted and how compliant are they from a regulatory standpoint in each one of the countries that they operate in?
Thank you, José. That was actually my point, but I'll say something else. Very, very interesting, very, very interesting point. I want to say two things. The first and foremost is the fact that never in history have we been able to have so much context on payments. Basically, SWIFT and SEPA, in a way, they provide effectively a knowledge border, a fog of war between us and where the funds came from, where have they been before and before and before. And so in terms of us, our ability to compete with payment providers, a lot of it is in the context of compliance, our ability to understand these flow of funds. And the second part is about utility. At the end, what the decision makers and our merchants have to deal with is understand the utility we provide them in the markets and verticals they operate in.
Oh, the world is so complex, and payments is another adds complexity to it. Each and every market today, especially emerging markets, has a higher degree of complexity in terms of what is the preferred payment method. So, as PSPs, we are better suited to solve that problem. So, as long as that complexity exists, I think we have a role to play. That's what it is actually for PSPs.
Yeah, I actually think the future we all overlap and do business with each other in some ways, but I think to really, especially as blockchain takes off and the world becomes a smaller place in some way, the collaboration between PSPs will be the key to survival as well. Not one of us up here can solve everything, but we can also part, and I think much more of that will come together. On which note, with 1 second left.
Co-opetition.
Oh, I like that. That's the one. And we've just hit the 5 seconds over, so I'd like everyone to thank the panel for an enlightening discussion.
Thank you so much.
Thank you.
Thank you.